Afternoon, everyone. Welcome to today's class. We are going to start with our class right away. I've just shared the screen with you guys there. If you have any question during this class, you are more than welcome to type the question on the chat. Even if you want me to repeat anything regarding what we're going to do today, you are more than welcome to use the chat. Just type your questions there, then we'll attend to it. This session is going to be recorded. I think I know I've been saying that we are recording this session, so the struggle is we need to download all these sessions and upload them on my tutor, because if we try to send some of these sessions via WhatsApp, it's too big. So the recording is too big. So WhatsApp cannot accommodate that. Nevertheless, the recordings are available. Just one thing before we start with the business of the day. All the handouts, which some of you maybe have received them through the class reps. If you haven't received them, if you go to my tutor under content 2020 on the folder changes in accounting policies, you will get all the handouts. You will get all the handouts. And there's also a video on my tutor. The video is explaining the principles of changing accounting policy, which is what we touched on last week. Another video, probably during the week, on next week around Monday, will be uploaded. That will be explaining changes in estimate. Changes in estimate is what we're going to deal with today. Last week, we were looking at changes in accounting policy. Today, we're going to look at changes in estimate. And a video dealing with the principles of changes in estimate is going to be uploaded as well in my tutor. So those videos, you can visit them anytime you want to refresh or when you're not clear with anything. But nevertheless, even during the classes, we are going to explain the principles. We're going to explain the principles. Here's the slides that I'm sharing. I'm not sure if you are able to see it. Just indicate there on the chat if you're able to see the slides so that we can start. I'm waiting for the indication on the chart, whether to see whether any of you guys, you can see the chart or not. You can see the slides or not. Just type on the chat there if you can see or if you cannot see the. All right, so I've got an indication that yes, we can see what has been shared. Thank you very much for that. Again, we're still dealing with this topic, changes in accounting policies, estimate and errors. This is a very important topic in this semester. So having said that, it doesn't mean other topics are not important, but this topic is tested year in, year out, on test as well as in exam. So it is very important that you understand this topic. And I know that in level 2, which is year 2, you were introduced to this topic. So we're just carrying forward from what the level 2 lecturers ended. So it's just a continuation. For example, today we're going to deal with estimates. Last week we dealt with accounting policies. So I know for a fact that estimates were introduced to you guys last year, but nevertheless, we're going to touch on the principles of estimate And at the end, we're going to do class example. The class example will be based on what you've been sent by the class reps. If you don't have any handout, then you can go on my tutor. You will get the handout with a class example. So we'll look at a class example number 1 today for changes in accounting, estimates. All right, let's start here. What is it that it would be expected of you guys to know at the end of this topic? You should be able to prepare the statement of profit and loss, another comprehensive income, statement of changes in equity, change in estimate note. You will also be expected to know that to know or to prepare profit before tax note. Very important. You will also be required to prepare the journals. Lastly, you are going to be expected to know the two methods that drives change in estimate, which is the reallocation method and cumulative catch-up method. So you should be comfortable with both these methods because any of these methods can be tested at any time. You can go to test and we test the reallocation method. You can come to exam and we test the cumulative catch-up method. So today we're going to deal with an examples that deals with both methods, and we'll see where is the difference between the two methods and how to apply it. That's what we'll be doing in today's class. All right. Carrying forward, so let us look at what is a change in accounting estimate. From time to time, if you don't read carefully on the questions, you might read information and think that this is a change in accounting policy. For example, if the company change its depreciation method, let's say, for example, from straight line to reducing balance method. If you don't think carefully, you might think that that change amounts or constitute change in accounting policy. So it is very important to know what are change in accounting estimates. If a company change a depreciation method or useful life, then that will amount to a change in estimate, not a change in accounting policy. And if that happens, then the standard tells us that you must adjust the carrying amount of an asset or liability, as well as you must be able to use the relevant and the new information and see how is it going to impact your profit and loss statement. For example, if a company changes a depreciation method or its useful life, definitely your depreciation is going to be affected. And you know that depreciation is an expense and expenses are recognized in the statement of profit and loss. But you also know that once you deal with depreciation normally comes from the assets. Then it means then our assets must be affected as well. This is the change in estimate. Going forward, I think I've already spoke about the issue of the methods on what would be expected of you to prepare. So there are two methods that can be used to account for change in accounting estimate. The first method is the reallocation method, as well as the cumulative catch-up method. So I will give the details with regard to each method as we go by. Also, when we do the actual exercise, which is class example 1. Reallocation method. So when you're dealing with the reallocation method, so no adjustment is made in the current year for the effect of the change on prior years. So let me state it now. How does change in estimate differs with change in accounting policy? Change in accounting policy, you account for it retrospectively. But change in estimate, you apply for it prospectively. In other words, from current to future. Current to future. That is very important to distinguish between the change in estimate and change in accounting policy. Change in accounting policy, you apply it retrospectively. You only apply it prospectively if you don't have information for prior years. But when it comes to change in accounting estimate, the standard tells us that we must apply for it prospectively, always. In other words, we only consider the current year information going forward. We don't go and adjust as we did in change in accounting policy and adjust prior year information. No, we focus on the current and the future. That is very important when it comes to change in accounting estimates. As I was indicating, accounting for changes in accounting estimate, prospective applications. What does that mean? That means then you must account for change in the current as well as the future periods. We're almost at the end of our summary of our principles that we're going to use to do the next example, disclosure. So how should change in accounting estimate be disclosed? You must disclose the nature of the change. Similar to what we did with change in accounting policy, you must state what happened. If the company changed its depreciation method, you must state as such. If the company revised its useful life, you must state as such that this is what has happened. So this information normally in the questions will be given. So you just need to disclose it and know where to disclose it. So when you are required to prepare the change in accounting estimate note, please note that you must state the nature of the change, what happens. You must also disclose the amount of the change. I think this exercise is all about that. They say, what is the impact on our amount? If useful life increases or decreases, what's going to happen to our depreciation, for example? Is it going to increase or decrease? Then this refers to the amount of the change, unless if future periods is not possible to estimate, then you must just indicate as such on the disclosure. All right, so now let's turn into the actual example and see as to all those principles that we're talking about, how we're going to go applying it. So in this example, class example number 1, there's a lot of required here. Required number 1 until required number 5. But we'll try and break down and do the calculations that is going to assist us in responding to all these required. For example, required number 1, they want us to prepare the statement of comprehensive income for the year ended 31st December 2012. Required number 2, they want us to prepare the disclosure notes. As I've indicated at the beginning of this session, that you must not prepare the notes with regard to profit before tax and change in accounting estimate. So required number 2, it requires that. Required number 3, they want us to show the journals for the year ended 31st December 2019, assuming that the 29, apologies, this will be 2012. If you look at the class example that has been said, it should be 2012. I'll revise this, and at the end of this session, I will send these slides because it has calculations which are not there on the class example. So it should be journals for the year ended 31st December 2012, assuming that 2012 depreciation journal has not yet been processed using the reallocation method. This is very important because knowing which method is required will lead you to do the correct calculations. If not, then you might end up doing the wrong calculations. Required number 4, against the journals for 2012, as I've indicated, we'll adjust this and resend it using the reallocation method before the change in estimate. So in other words, we want to see before the change, what how the journals are going to be processed. Lastly, we need to show all the information which is above. In other words, required number 1 to required number 4 using the cumulative catch-up method. In other words, in this question, what is required is asking both the method. And this is a good question because normally in an exam or in a test situation, you're going to be asked one method. So you need to be comfortable with either of the method because you don't know which one is going to be asked. All right, so here's the information provided. Statement of profit and loss. As at 31st December 2012, I'm not going to read much on this. We given turnover until profit for the year, which is total profit and comprehensive income for the year. This is the information I want us to spend some time on reading. Additional information always give you the insight of what is required. Additional information here, it is given as follows. I'll quickly read it and we'll try and break down and see what type of calculations we need to do in order for us to respond to those required number 1 until required number 5. So what is provided to us here, the following information is presented with regard to delivery vehicle. Always when they give you a vehicle in accounting, you must be on the lookout to see, is it a delivery vehicle or a motor vehicle? Why am I saying that? I'm saying that because it has an impact on the VAT. I hope you guys have done VAT. So in terms of VAT Act, it states that when you buy a motor vehicle, when it comes to VAT, input tax is denied. That is very important. Whereas when you buy a delivery vehicle, you can claim input tax. In other words, you can claim VAT back. Okay, let me put it this way. As a business, in terms of the VAT Act, when you buy something and you're a VAT vendor, then SARS will tell you whether you can claim VAT, your VAT back or not. So when it comes to a vehicle, you need to differentiate between a delivery vehicle and a motor vehicle. And this will also assist us in terms of knowing whether when you calculate depreciation, will the cost include VAT or exclude VAT? So we cannot separate tax with accounting. It goes hand in hand. That's why I'm highlighting here that this is a delivery vehicle. So a delivery vehicle, when you buy it, you can claim VAT from SARS. So what does that mean? It means that when you calculate your depreciation, the amount that you're going to use will exclude VAT. Whereas if it was a motor vehicle, the amount that you're going to use to calculate depreciation will include VAT. The reason being that input VAT is denied in terms of the VAT Act. I hope that is clear. If you haven't done VAT section in tax, then I believe this will assist you. But for accounting purposes, it is very important to say, what type of vehicle do we have? Here we have a delivery vehicle. So when we have a delivery vehicle, if I want to calculate my depreciation means the cost that I'm going to use must exclude VAT. That is the point I wanted to say. All right, so it's delivery vehicle. We know that whenever we're calculating the depreciation, the amount which we're going to call it the cost must exclude VAT. All right, let's proceed. So due to technological changes, the remaining useful life as at 1st January 2012 is estimated to be 2 years. This is very interesting. So this is where the change now is coming. And the change I can tell you here is an issue of useful life. So the information that is provided to us, they're indicating to us that due to technological changes, the remaining useful life as at 1st January 2012 is estimated to be 2 years. All right, so if you read and then you just stop there, you need to ask yourself, say, what was the original useful life? We'll get it when we go below with this information. And what was the remaining at this period, 1st January 2012? Let's proceed. Date of purchase of the delivery vehicle is 1st January 2010. So this delivery vehicle was purchased in 2010. And this revision of useful life it is happening on the 1st of January 2012. So in other words, after 2 years. That's very important. Depreciation must still be recorded in the financial statement. Very important. So in other words, depreciation in the financial statement that we saw here is not yet recorded. We still need to record the depreciation. We are given information of the delivery vehicle, the cost inclusive of VAT, 85,500. So this talks to what I was saying here at the beginning, that you need to know whether when we calculate our depreciation, will our amount of delivery vehicle include or exclude VAT, and we conclude that it's going to exclude it because we're dealing with a delivery vehicle. Accumulated depreciation given on the 1st of January 2012, 30,000. Residual value, no amount. Useful life, 5 years. Wear and tear, 5 years. And underneath, they say the company uses the reallocated method for any adjustment to the carrying amount of the asset. Tax rate, 30%. VAT, 14%. Now the question is, why VAT is 14%? Because VAT now is 15%. So we're dealing with the information before the change of VAT. VAT, as we all know, it was 14%. It has increased to 15%. I think it was in 2019. That's then to be corrected. But I think in 2019, VAT was increased to 15%. So we're going to use 14% to do the calculation. The most important thing is for you guys to understand. If it comes in an exam, which I believe if you get any VAT, it will be at 15% because we need to test it with the current rate. But the application of the principles remain the same. So we can't talk about 2012 and we increase our VAT to 15%. Then there will be a problem. Even you guys, when you are accountants or auditors, either way, and you are given, you are reconstructing the previous financials of prior years and it's before VAT changed, then you are bound to use the 14% of VAT. All right, nevertheless, coming back here to this issue, this is where the crux of the matter is at. If we understand this information or additional information, our problem is half solved, or if not fully solved. So let's go back to it again and see, because there's some calculation we need to do here. So in other words, what I'm taking here is that the company is using reallocated method. Very important, because the way you're going to do calculations is going to differ if you're using the cumulative catch-up method. But the good thing about this exercise or this example